Good morning, and I hope you're all well. Today we're going to look at raising your prices on an individual basis. This is something a lot of people don't do often enough, and don't feel terribly comfortable in doing. So we're going to share some pointers with you on how to create some instant profit in your business by reviewing your clients on a case-by-case basis. So I'm just going to pop over and share a different screen. So it's really important when you are raising prices on an individual basis that you look at them clearly and objectively. Let's just pop this up there. And why is that? So let's go back to your 90-day plan. If you've got a 90-day plan in your business, you'll have an idea of what the increase in profit is that you're trying to achieve in your next 90 days. So if that's, say, £1,000 or £10,000 or £25,000 perhaps, write the number down and make sure you've got that increase objective clearly documented somewhere. Even if it's a yellow sticky on your computer, something somewhere that is a reminder that this is the profit objective that you're trying to achieve in the next 90 days. So let's look at what happens when we want to increase prices on an individual basis. If you review each client at least once a quarter, especially when we're working on quarterly goals, review each client at least once a quarter and consider, are they due a price rise? You can traffic light your clients. So for example, you want to look at how much time it takes to deliver your service or your product to your customer. How easy it is, so how quick or efficient it is to deliver that process. So something might be quite quick and efficient, but it's hugely complicated in terms of its deliverable. It might be something that can't be covered by someone else, so you've got an element of risk in there. How much does it cost you to deliver your product or service to that client, and have those costs increased? So say there's a particular software or a service, or the price of providing the products or the cost of sales, is that increasing, and has that driven your margins on that particular client down? How much fun is that client? Is it someone who you really enjoy working with, or is it someone who is needy and quite painful and takes up a lot of your time and a lot of your headspace? So you can grade the client on using this traffic light system to see whether they are reds, in which case you're not really getting value for money from them and you need to increase their prices. Oranges, maybe they need a bit more work and they're nearly there. Or greens, you're getting the right fee from that client for the service, the time, the effort and the cost of delivering to that client. So think about things, not just the margin that you've got on the particular client that you're dealing with, but also in terms of ease of deliverability and how much fun they are, because we really want to deal with clients who are fun and you enjoy talking to and you enjoy working with. Email your clients and give them 30 to 90 days notice. So we have some of our high growth clients, we've moved them on to what we call a dynamic billing process now, because they're growing so quickly and they're moving, their businesses are expanding. So the time that we're spending on their business, doing their bookkeeping and their data processing, is increasing as they are. The time it takes to create their management accounts is increasing. So for our high growth clients, we review all of their billing on a quarterly basis, and it took a while to move people over to that, and it had to be explained, and we had to talk through what was happening. But on the whole, if clients are growing and they know they're growing, then they're quite comfortable in paying a higher price for the service that you are offering. Equally, when the volumes go down, you must provide an update to that, and you must reduce your prices as well. So it needs to be fair on both sides. Now you could call them or send a Loom video to explain the rise. So what we tend to do is we might email first and sort of preempt it and plant that seed in their mind. We try and give them at least 90 days notice. We might call them or send them a Loom video, depending on the client and how busy they are and what their diary looks like. and whether or not they're likely to object to a price rise. Hopefully not. If somebody values your service, then it's unlikely that they're going to object to it, but they might want to discuss it so that they understand exactly why you are increasing your prices and for what reason. Now think about the impact on your business. So if you had a £30,000 a year business and you were increasing by 4%, that's another £100 a month or £1,200 a year. If you've got a 50k business and you're increasing your prices by 5%, that's another £208 a month or £2,500 per year. And if you're a 100k business per year and you multiply that by 10%, then that's £833 per month or 10k per year. So if you had a profit target of another £1,000, £2,000, £3,000 a month, you can see how easy it is to get up to those figures if you have the capacity to increase prices on an individual basis for clients who are taking up more of your time and your effort. Now, if the price rise is less than 5%, clients will hardly notice, and it's not enough for them to go elsewhere. If you review quarterly and annually, it takes the pain away from price rises. Now, we have a number of clients who haven't raised their prices for years, and in fact, we were like that. If a service doesn't change year on year, and ultimately our systems are getting more efficient and our costs are reducing and the time it takes for us to manage those accounts reducing, we don't increase our prices for those clients. My margins are still the same on those clients, even though I haven't increased their prices, or we've built efficiencies in where we've passed that on to the client, especially in today's environment when it's very busy and it's difficult and some people are really struggling. So if we don't raise prices, we're doing it deliberately because we're still maintaining the margins. What we do is increase prices where the margins are being eroded because the client is growing, or because costs are increasing, or because the time it takes us to start looking after that client has taken more time. So if you review your clients, are you under or over delivering? One of the biggest issues or challenges that we all face as business owners and entrepreneurs is scope creep. And quite often the scope of what you're delivering changes over time as your customer wants more. So unless you are a truly transactional business and you're charging your customer by individual transaction, scope creep has a real potential to erode your margins. This is something that you need to be looking at. Now, when we're working on quarterly 90-day plans, it's really, really important to make sure that you understand exactly how much you're billing your clients and that you're being paid for everything that you're doing for them. So I would recommend ignoring an annual review and doing a quarterly review. Yes, it's a little time consuming, but if it saves you £1,000, £2,000, £10,000 a month in terms of profit leaks, then it pays for itself time and time and time again. So how to deal with objections? In the same way that we saw this with raising prices across the board, one of the things that your clients do need to get used to is that they can keep the same price or they can keep the same process, but they can't necessarily keep both. So it's the same price, the same service, but not necessarily both, because it's just not congruent with each other. So the client has to decide on what is most important. If they want to carry on paying the same price and they don't want to pay for the additional services or the scope that has crept, then you have to cut some of the things that you're delivering out if you want to protect your margins. Now, if we're focused on profit and we want to drive profit into our bottom line, we have to make sure we're being paid for everything that we do. Otherwise, we simply aren't a profitable enough business. And that's how we get into the trap of not having enough money to pay ourselves at the end of the month, not having enough cash to pay our tax bills when they fall due. And it's why we become busy doing stuff that we're not being paid for, or we're not being paid enough for. And that's the challenge to be able to try and manage. So what I want you to do today is review your top 5 clients, products or services. So don't do everything, just review the top 5. Look at what they're paying now and what they should be paying based on your knowledge of your time, your costs, the complexity of delivery, and the margin that you are achieving for that individual client. If there's a difference in terms of what you should be paying or what your client should be paying per month to what they should be paying, then write that down. It makes a big difference if you can see those numbers in writing. So say, for example, that Bob the Builder is paying £500 a month, but they should be paying £600 a month. The difference is £100 a month or £1,200 a year. Now, if you multiply that up by 3, 4, or 5 clients who are not paying the price that they should be paying for the service that you are delivering, then you've now got a problem. This is a profit leak because you're undercharging, or you're not charging the fee that you should be. You're not being paid what you're worth, and your client is effectively taking services from you at mates rates, for the want of a better word. And sometimes mates rates is fine. And there are clients where I would say we have provided mates rates over the years because we've invested more time and effort into a business that perhaps is struggling, or that perhaps hasn't achieved the profit objective that we are working towards. But once they do, and your client can afford to pay that, you should be looking at increasing your prices or reducing your services, because ultimately you have to protect your own business too. So we keep notes of what's going on in the business, and we use that to help drive our price rises. So your action plan today is to identify your target increase. What are you trying to achieve this quarter? Identify the percentage of price increase that delivers those target pounds. So if you want to increase your business by, say, £3,000 a month or £10,000 a month, what does that mean in terms of pure price rise? Now, it might be that not all of your profit objective can be achieved by price rises. There's many other things that we can do to add profit to your bottom line, but this is just one of the tools in your toolbox to be able to deliver that. Create an action plan of who you're going to talk to, how and when. Notify your customers, deal with their objections, arrange one-to-one meetings to discuss if necessary, and then implement your price rise. And at the end of the quarter, we'll review and see whether that achieved your objective. So I hope you found that useful. If you did, please let me know with some likes or some comments. If you have any questions, do let me know, and I'll speak to you again soon. Take care for now.